Hey everyone, welcome to the Copilot Exchange. My name is Steven, and in this video series, we're going to learn all about the Relative Strength Index, or RSI for short. So let's get started. Now here's the RSI definition, straight from Investopedia. The Relative Strength Index is a momentum indicator that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock. And the RSI is displayed as an oscillating line and can have a reading between 0 to 100. Now, traditionally, RSI signals are considered overbought when the indicator is above 70 here, and oversold when the indicator is below 30 here. So, how does it all work? Well, the RSI tracks the closing price of whatever time period you have selected on your chart. Commonly, the RSI tracks 14 periods of time to generate its output. So if you have the daily chart selected, you're telling the RSI to track the closing price each day in the last 14 trading days. If you have the hourly chart selected, you're tracking the closing price of each hour in the last 14 hours. And similarly, if you have the 30-minute chart, you're tracking the last 14 periods of 30 minutes, which would be about 7 hours of price action. Now, this is the same way moving averages work, so pay attention to your time settings as different times tell you a different story, and I'll touch more on time settings in a minute. Now, the equation to calculate the RSI looks like this, but don't worry, this is all calculated and plotted for you on most trading platforms, and I'll show you how to pull it up on your chart shortly through TradingView. Now, I want to pause and point out an important metric. Anywhere from 60 to 70% of trading volume in the US markets is executed through high-frequency algorithmic trading, not by the physical hands of retail investors. That means you as a person are competing with computer programs that have been coded to execute trades when certain criteria are met. The RSI is a key component considered in many trading algorithms, so overbought and oversold signals are actually a good way to stay in tune with market sentiment, as most computers are also paying attention to these levels and adjusting their strategy accordingly. So a good way to think about the RSI is picturing a bull and a bear playing tetherball. Let's assume the ball is at its resting state in the middle, representing the midline of the RSI chart at 50, highlighted here in yellow. So the bull gets a good hit and the ball wraps around the pole 7 times. And note we have now hit 70, or traditionally overbought status. See how the ball is tightly wrapped up? The energy potential for it to unravel increases and becomes maxed out at 100. Now the same thing applies if the bear gets a good piece of the tether ball and it wraps around the pole 7 times in the other direction. Now we're at an RSI of 30. Now this is an indicator of oversold status. All things being equal, the more times the ball wraps around the pole in either direction, the quicker it will unravel back towards its resting state. It's important to note you will rarely, if ever, see the daily RSI go to extremes of 100 or 0, although it can get close before it reverses trend. The stock example in the background that you see is Ford, and it has never exceeded 90 on the daily RSI or gone below 12. Now let's take a look at the RSI chart in real life. I'm using TradingView as my platform, and for this tutorial series, I'm going to use Ford, or ticker symbol F, as our example stock. To pull up the RSI chart, simply click up top on Indicators and type RSI in the indicator search bar, select it, and it will populate your chart. You might still be wondering, what time frame should I be looking at through the RSI lens? And the answer really depends on your strategy, but in general, and this applies to most chart indicators, the longer the time period you're looking at, the more trustworthy the trend. I like to use the daily chart personally to spot long-term trends and mark historic support and resistance levels. If I see an oversold signal, I will then jump into a shorter time frame to get a higher resolution of price action. Personally, I like to use the 30-minute chart to help me locate the best value for my bid or ask. So first, you would make the determination if it's a good day to buy or sell by the daily RSI. Then you would want to jump into a shorter time frame to pinpoint the best opportunity to buy or sell in that day. And my advice is, if it's not a good day to trade, meaning if you aren't touching your established oversold or overbought indicators, wait for it. Don't rush your order. Let the price action come to you. And if it doesn't, oh well, there are tons of other stocks that will meet these requirements at any given time. It's simply just a matter of patience using this type of a strategy. So to wrap this session up, let's look at one little detail you can adjust on your RSI chart. Now sometimes you'll notice a stock tends to respect different levels than the classic overbought 70 and oversold 30 lines. And if you want to adjust your RSI chart to account for this, simply click on the gear icon here in the top left and select Style. Here you can adjust your upper and lower band levels to more accurately track your custom overbought or oversold statuses. I would not recommend changing the 14-period option under inputs. I'm suspicious that trading algorithms most likely stick to the classic RSI formula when deploying their strategy. In my next RSI video, we will take a closer look at the patterns in the RSI chart to help you locate and fine-tune your trading strategy, so stay tuned for that. If you found this video helpful, please like and subscribe for future updates, and I look forward to sharing more with you soon. Thanks for watching.